Warren Buffett. Top 10 stocks I'm focusing on for long-term wealth in 2026. Right now, your feed is probably flooded with videos claiming to reveal the best stocks for 2026. You've seen the pattern before. A few popular company names, some flashy charts, bold price targets, and a confident voice telling you this is your once-in-a-lifetime opportunity. Most of it sounds impressive, but when you look closer, there's very little substance underneath. It's usually a collection of guesses, not a strategy. This video takes a completely different path. This is not about predicting the future or chasing the next hot trend. It's about building wealth without depending on luck. Instead of betting everything on one company and hoping it explodes, the goal here is to own the companies that sit at the center of the AI revolution, no matter which specific product or platform wins. What you're about to see isn't a random stock list. It's a connected system. Every company plays a role in a much larger structure that is already shaping how artificial intelligence grows, scales, and makes money. And when you understand that structure, investing becomes less about guessing and more about positioning. Before we go further, one thing matters more than opinions: results, accountability, and track record. Anyone can sound smart talking about the future. Real credibility comes from what actually happened. This is the third year I've published an annual stock list, and instead of asking for blind trust, I believe in transparency. The 2024 list delivered an average return of around 77% in a year when the S&P 500 itself gained over 25%, which was already one of its strongest performances in recent history. The 2025 list followed with an average return of roughly 36%, again outperforming the broader market, which was up about 18%. Combined, that's close to a 140% gain in just 2 years. No leverage, no day trading, no chasing hype. Just understanding where growth was heading and owning the company's best position to benefit from it. That philosophy is exactly what drives the 2026 strategy. Core. Philosophy. Get rich without getting lucky. The biggest mistake investors make is believing that success comes from picking the single winner. That mindset turns investing into gambling. Real wealth is built by owning systems, not lottery tickets. Artificial intelligence is not one product, it's an entire ecosystem. Models sit at the top. Chips power those models. Factories manufacture the chips. Data centers run them. Software turns them into real-world tools. Security protects everything. Instead of guessing which AI app will dominate, this strategy focuses on owning the companies that profit every time AI grows, regardless of which brand gets the spotlight. That's how you remove luck from the equation. The foundation. Broad AI exposure. Beating the market is simple in theory, even if it's not easy in practice. Historically, just owning the Nasdaq 100 has outperformed the S&P 500 because technology compounds faster than almost any other sector. But the Nasdaq still includes companies that have little to do with AI's future. That's why the foundation of this portfolio is a technology-focused ETF like Vanguard's Information Technology ETF, VGT. It sits perfectly between diversification and focus. It excludes consumer staples, telecom, and unrelated sectors while concentrating entirely on semiconductors, software, systems, and AI-driven applications. Its top holdings include companies like NVIDIA, Microsoft, Broadcom, AMD, and others deeply embedded in the AI value chain. It also carries lower fees than broader index funds, which quietly boosts long-term returns through compounding. This ETF isn't meant to generate excitement. It's meant to provide stability, exposure, and a strong base upon which everything else is built. Why AI is different this time. The global AI market is projected to grow nearly 19 times over the next decade, with growth rates far exceeding historical market averages. When industries grow this fast, perfect timing matters less. Being positioned matters more. AI isn't a trend you wait to time. It's infrastructure. And infrastructure creates long-term winners. At the very top of the AI stack are the models themselves. The model layer. Who makes the rules? AI models define everything. They control the APIs, pricing, capabilities, and standards that the rest of the ecosystem must follow. If you control the models, you influence the entire market. That's why companies like NVIDIA, Google, and Meta sit at the top of this list. Meta's open-source Llama models have become deeply embedded across enterprises and internal tools. Google's Gemini is integrated across Search, YouTube, Gmail, Workspace, and Cloud, giving it unmatched access to data, feedback, and monetization channels. NVIDIA has gone beyond chips and entered the model space directly, offering enterprise-grade AI frameworks and agent-based systems tightly optimized for its hardware. These companies don't just build models, they distribute them at massive scale. That distribution is something startups simply cannot replicate. Chips. The real bottleneck models don't run on ideas, they run on silicon. Every AI breakthrough increases demand for accelerators, memory, networking, and power. That's why the next layer focuses on the companies that build the physical foundation of AI. NVIDIA dominates the data center GPU market with overwhelming share. Its hardware has become the default choice for training and inference worldwide. But NVIDIA is no longer just a GPU company. It's an entire AI computing platform, combining software, networking, and system design into one tightly integrated ecosystem. Google plays a different role with its custom TPUs, optimized for its own models and increasingly offered to external customers. Owning both NVIDIA and Google means you don't need to guess which architecture wins. You benefit either way. Broadcom quietly controls the networking backbone of the internet and dominates custom AI chips for companies like Google, Meta, and others. AI data centers live or die by networking efficiency, and Broadcom owns that layer. Then there's TSMC, the backbone of global semiconductor manufacturing. Nearly every advanced chip in the world relies on TSMC's fabrication. The barriers to entry are so high that its dominance only grows stronger over time. Finally, memory. AI models are memory-hungry, and high-bandwidth memory has become essential. Micron stands out as a critical supplier, especially as AI shifts demand away from consumer cycles toward structural long-term growth. Together, these companies don't need to guess which AI application wins. They profit every time someone trains a model, deploys an agent, or scales an AI service. Data centers, power, cooling, and scale. AI doesn't work without physical infrastructure. Power, cooling, networking, and space are now the real constraints. Vertiv designs the power and cooling systems that make high-density AI data centers possible. As GPUs grow hotter and more powerful, liquid cooling moves from optional to mandatory. That shift gives Vertiv pricing power and long-term relevance. CoreWeave represents a different angle. Instead of competing with hyperscalers, it builds AI-first data centers and rents raw GPU capacity at scale, partnering directly with NVIDIA and Microsoft. It offers pure exposure to the physical expansion of AI. These aren't flashy businesses. They're essential ones. Enterprise. Software, where AI becomes real. AI creates value when it enters real workflows. Palantir operates at the intersection of data, AI, and decision-making. Its platforms allow organizations to move beyond dashboards and into AI-driven execution. This isn't experimental software. These are mission-critical systems used by governments and enterprises where accuracy and accountability matter. As AI agents become more autonomous, platforms like Palantir become essential intermediaries between models and real-world actions. Security, the final lock. More. AI means more risk. Every automated system expands the attack surface. CrowdStrike thrives here because modern security is a data problem, and CrowdStrike operates at massive scale. Its AI-driven platform detects threats faster than humans ever could. As AI adoption increases, security demand increases with it. CrowdStrike benefits structurally, not temporarily. Why this system works. This isn't a collection of stock picks. It's a system. Models drive chip demand. Chips drive manufacturing. Manufacturing drives infrastructure. Infrastructure enables software. Software demands security. Each layer reinforces the others. That's how you reduce reliance on luck and increase the power of compounding. This strategy isn't about predicting the next viral AI product or timing market swings. It's about aligning capital with the most powerful forces shaping the global economy and letting time do the work. If you found value in this breakdown and want deeper, science-backed analysis instead of surface-level hype, support the channel by liking the video and subscribing. It genuinely helps more than you realize. The goal here is simple. Understand the system, build conviction, and invest with clarity instead of emotion. Because in a world changing this fast, your most valuable asset will always be your ability to understand, adapt, and think long term.